Ladies and gentlemen, welcome back to the channel. Stocks are coming under pressure yet again today. NASDAQ down about 1.5%. S&P's down close to 1%. But Tesla up 1% today. What's going on? Why are markets coming under even more pressure today? We'll get into that in today's episode, despite what sounds like good news on face value. Now, we'll go over all of your Tesla stock specific news as well. Let's not waste your time. It's Friday. Let's get into all of the news you need to know. Hit that like button as well as subscribe to the channel and check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, let's begin. And here you can see on an index level, you are coming under the most pressure within the NASDAQ. The NASDAQ down about 1.1% today. S&P's down 0.66%. The Dow is about break even. The Russell 2000 down 0.3%. So small caps and the Russell trade relatively is outperforming the NASDAQ. Okay, and there's a reason for this. But the VIX is up 7.14% today to 15.91. Still pretty low, but that is a big jump in the VIX. Now, there's kind of two stories today. First and foremost, Fed Goolsbee says he's not uncomfortable front-loading too many rate cuts. Okay, Chicago Federal Reserve President Austin Goolsbee on Friday explained why he voted against this week's interest rate cut, telling CNBC that policymakers should have waited for more data on inflation and on unemployment. He says, quote, "I'm pretty optimistic that for 2026, rates will be able to be a fair bit lower than they are today," the central banker said during the interview. So that actually sounds positive from one of two guys that did not want to cut rates at all at the last meeting. Okay, and potentially this is why that small cap trade is outperforming a little bit today. If we take a look at the probabilities for Fed cuts, previously we were pricing in the first cut of 2026 in July, and you're still pricing in the first cut of 2026 in July. June actually is pricing in the first cut. April pricing in the first cut. Yeah, April. You're actually now pricing in a rate cut April 29th. That was up from July yesterday. Okay. The or before the Fed meeting. Okay. Kind of crazy. You've priced in a Fed rate cut 2 meetings earlier than what we were before the Fed. But yet markets are still coming under pressure. If we take a look at the heat map today, you can see it's the semiconductors yet again driving this market lower, as well as the infrastructure trade around AI. You can see Oracle down another 3% today. Microsoft down 0.6%. Palantir down another 3% today. NVIDIA down almost 1%. Broadcom, which reported great earnings, by the way, down 10%. AMD's down 2.34%. Micron down 4.5%. These smaller semiconductors as well, KLA, AMAT, LRCX, that's Lam Research, down anywhere from 2 to 4%. Okay. Electronic components down big. Google's down 0.61%, Meta's down 1%, Amazon's down 1.41%. There's a lot of pain in the AI trade at this point, and it stems from one Oracle earnings, and now this reaction to Broadcom, and it's really pulling down the rest of that trade, even if you have nothing to do with the AI trade, and you're a small cap, risk on software stock, you're still coming down. Now, specifically in the AI trade, we actually had really good news today. It says NVIDIA considers increasing H200 chip output due to robust China demand, Reuters sources say. It says NVIDIA has told Chinese clients it is evaluating adding production capacity for its powerful H200 AI chips after orders exceeded its current output level, according to two sources briefed on the matter. The move comes after U.S. President Donald Trump said on Tuesday that the U.S. government would allow NVIDIA to export H200 processors, its second fastest AI chips, to China and collect a 25% fee on such sales. I mean, what more could you want? Okay. The fears around the AI trade today are misplaced. My opinion. Okay. That's just my opinion. But I mean, when you get headlines like this, you should pay attention. Now, Wedbush analysts say that Trump's AI order is seen as a major boost for big tech. Wedbush analysts say that President Trump's AI executive order is a major win for companies such as OpenAI, Google, Microsoft, Anthropic, and Meta by establishing a single federal standard. The order removes key regulatory obstacles that could slow AI development. The analysts note that the action reduces uncertainty around future AI expansion and eliminates a significant overhang for the sector. So even that has not had a positive impact on the AI sector of this market. A little bit yesterday, it was starting, but Oracle's slight miss across the board really threw into doubt the AI trade again. And AI is one of those things where, everyone has PTSD from the dot-com bubble, right? People are all like, oh my gosh, when is the party over? Okay, that's what everyone thinks. It's, nervousness first before they accept reality. The AI is here to stay. It's alive and well. Anytime there's one small problem, company barely misses estimates, and it's seen as like, oh my gosh, is this the end of AI? Are we in a bubble? Blah, blah, blah. We know we're not. We know we're not even close to that. And, well, this is where the money is made. This is called a dislocation, okay? For markets to sell off these stocks on really non-events is where the opportunity lies. Goldman Sachs today published their outlook for stocks in 2026. Goldman Sachs expects continued market strength in 2026, setting a 7,600 target for the S&P 500. Chief U.S. equity strategist Ben Snyder says AI-driven productivity will lift earnings, projecting S&P 500 EPS to rise 12% to $305, with 6 major tech firms providing nearly half of the growth. While big tech remains the main driver, Snyder also sees improving earnings for the rest of the index. He notes risks ahead, including slower Fed easing and pressure on profit margins, but maintains a broadly positive outlook. Fed Hammock says that Trump's legislation will add dissent stimulus next year. This is something we've talked about for a while now. One of the main bull theses for next year, about midpoint next year, you are going to see a lot of stimulus start to kick in. No tax on tips, no tax on overtime. That's going to positively impact in the means of thousands of dollars, 60 to 100 million Americans in some way, shape, or form. That's a positive stimulus. If we do get a new Fed chair and rates continue to come down, if inflation comes down, and the real estate market can pick up out of the slump it's been in, there's a lot of equity out there that is, once people sell their homes, is going to hit their bank accounts. And just these two things alone are going to be a powerful driving factor next year, let alone AI, let alone trade certainty, or anything else that happens. Fed Hammock says, I'm watching to see if price increases come from delayed tariff effects. Fed Hammock says the economy will get a boost from fiscal stimulus. Fed Hammock says, I would like more visibility into private credit. He says private credit doesn't appear large enough now to create systemic risks. He says it's not obvious that inflation pressures are just from tariffs. He says, I'll be watching carefully to see if inflation moderates and jobs stabilize. And he does say, I would prefer for Fed policy to be a little bit more restrictive than the current levels. So basically saying he would like rates to be higher than where they are today. Again, some of these Fed guys are a little on the delusional side, but everyone's entitled to their own opinion. Fed Hammock says right now the Fed policy is right around neutral. He says the job market break even is greatly reduced, and the Fed's decision this week was complicated. No, it actually wasn't. There was a lot of economic data that we did not have, and the Fed just wanted to be in line with the markets. The Fed did not want to be positive or negative this week. The Fed preferably wanted this Fed meeting to be kick the can down the road kind of thing. We'll evaluate at the next Fed meeting. That's why they really didn't change the dot plot. Besides, they raised their growth expectations for next year and lowered their inflation expectations for next year. That's it. Everything else pretty much stayed the same, which the Fed this week was actually a positive catalyst for markets. I see a lot of confusion around this. People are like, oh my gosh, stocks did not rally after the Fed. Okay, that's because of Oracle earnings. That's because of the AI trade and the weighting that is in this AI trade. If you're not in AI at all, you're not doing bad right now. If you're in industrials and utilities and healthcare and banks and some of these boring areas that are not a part of the future like AI, you've actually done fine this past week. It's a lot of retail investors, a lot of, people that are trying to make a lot of money, people that are trying to change their financial futures faster than banks, consumer defensives, utilities, right? People that are striving for those outsized returns that are subject to volatility this week. And sometimes, that's just how it goes. Sometimes, tech is going to be hot. Sometimes you're going to be on a hot streak. Sometimes one small thing is going to happen. Wall Street's going to freak out. They're going to sell that quote unquote riskier area first. And that is what we have seen, not because of the Fed, but because of Oracle earnings. And now Broadcom earnings, just as a, secondary tier to that. Semiconductors, software, AI, infrastructure around AI. That has been the main story the last 2 days, causing this selling pressure. Fed Hammock says that he is hearing that firms are managing payrolls through attrition. That basically means once somebody quits their job, they're not refilling that position. Okay. I can vouch for that. People quit working for me, and I'm not as fast to hire somebody new. It's not like, oh my gosh, now we got to hire somebody. That's not the situation that I'm experiencing either. It says local contacts describe low hire, low fire job sector. Fed Hammock says the Fed is spending a lot of time studying AI, and he says price stability over the long term will support job growth. He also says inflation is too high and is stuck closer to 3% than 2%, and he says he's seeing some softening on the labor side of the economy. White House AI advisor Krishnan says we'll be working with Congress in the coming weeks and months on a single national framework for artificial intelligence. This headline from Goolsbee is a little shocking. Goolsbee says, and you might have to pause on this one for a minute. Fed Goolsbee says, I'm projecting more rate cuts than the median for 2026. So Fed Goolsbee said, yeah, he didn't want to cut rates last meeting, but he's willing to cut rates more than the Fed is currently projecting next year, which is probably 2 cuts, right? The Fed is pricing in 1. Markets are pricing in about 1.5. And Goolsbee says he might be willing to do even more than that. So to come from one of the Fed officials that did not vote in favor of a rate cut at the last Fed meeting, to hear that he actually would support more than 1 cut next year, again, the Fed continues to be a positive catalyst for this market, but AI and that sector just can't get out from under themselves. Paulson today says he's not seeing tariffs translate into widespread price increases. Fed Schmidt today says monetary policy is only modestly, if at all, restrictive. He says, I continue to hear concerns about inflation from people in the district. He says the data is still incomplete, but based on what is available, inflation remains too high while the job market seems largely imbalanced. He says, I dissented against the rate cut this week because not much had changed since the last meeting when I also dissented. He says the labor market is cooling but remains largely imbalanced. and inflation is still too high. Economy shows momentum. Also in the news today, the Trump administration plans to boost the tax break for corporations. China today is preparing as much as $70 billion in chip sector incentives. Trump has said about Venezuela, quote, "We are going to be starting on land pretty soon." Trump says he speaks to China's Xi a lot about AI. He says he will talk to China and Russia about denuclearization. Trump says, "We would help on security with Ukraine." Trump says, "I thought we were near a deal." Now, unfortunately for the bears out there, this situation of, single stock earnings like Oracle and Broadcom, having areas where the markets did not exactly love, this is not a systemic problem to AI. There's going to be winners, there's going to be losers, there's going to be companies that go through hard times and then do fine again. For single stocks like Oracle, again, barely missing across the board, to impact all of these other companies that are not missing across the board just sounds asinine to me. To try to interpret this as a, broader problem for the AI ecosystem just does not make a lot of sense at all to me. Okay. I guess maybe the fear would be companies slow down AI investments. And the answer that I have to that is they can't. Companies cannot slow down. I think the markets really have a severe form of a lack of collective brain cells. Okay. Short-term memory loss, whatever you want to call it. But Google's CEO said over a year ago that they would rather overinvest in AI than underinvest in AI and lose the AI race. Every company thinks the same way. That's why they're spending so much. It's not necessarily because they believe they need to absolutely right now. It's because the next guy is. What do you think happens if all these other companies slow down investments in AI and then Amazon's the company that continues full force ahead? 2 years, 3 years, 5 years later, you're going to see the rewards of that within Amazon that leaves everyone else in the dust. And I'm just, pointing out one company here. Companies cannot not invest in AI. Like, I would think that's where the broader fear is coming from, why semiconductors are slowing down, that maybe companies are going to slow down their CapEx. It's not going to happen. Okay. And I do think this fear in the AI areas of this market heading into next year is a buying opportunity. Okay. Solidly and strongly a buying opportunity. No other way to put it. And not to help that at all, Oracle says some data centers for OpenAI delayed to 2028 from 2027. Also, Donald Trump yesterday says the Wall Street Journal has another ridiculous story today that China is dominating us and the world on the production of electricity having to do with AI. They're wrong as usual. Every AI plant being built in the United States is building its own electric generating facilities. The approvals are being given carefully but very quickly, a matter of weeks. Any excess electricity being produced is going to our electric grid, which is being strengthened and expanded for other purposes than AI, like never before. In other words, AI has far more electricity than they will ever need because we are building the facilities that produce it themselves. We are leading the world in AI by far because of a gentleman named Donald J. Trump. So, there's fears coming out of China as well. Like, there's different fears that markets have, but I believe they're all misplaced. Oracle says the delays on their data centers with OpenAI are largely due to labor and material shortages, not issues with the company. You can also see that Bitcoin today coming under some pressure. You were in the 92, almost 93,000 level, and you have subsequently fallen back below 90,000, which 90,000 at this point is a real battleground, okay? You've started to see some support once you break below 90,000. That's where a lot of the buying pressure begins to come in. I think people are pretty comfortable buying Bitcoin in the high 80,000 range. But you really want to get back above 100,000. You really want to see a move closer to 100,000 over the days and weeks to come. And this is going to help the risk on areas of this market as well. Bitcoin and stocks tend to kind of feed on each other lately. Today, the CNN Fear and Greed Index is coming in at 44. Yesterday, it was at 46. Market momentum is fear. Stock price strength is fear. Stock price breadth is fear. Put and call options neutral. Market volatility is neutral. Safe haven demand is greed. And junk bond demand is currently in fear. So there's a lot of room for, things to strengthen out there. The percent of stocks trading above their 50-day moving average coming in at 63.69, which is, at a pretty good level for where you'd expect, this to be relative to the S&P. Again, we're having a red day today. S&P is down more than 1%, but you're pretty close to all-time highs still. Now, again, there is a generalized outperformance in Tesla today. Tesla was one of the only green stocks for a while on the day today. At the time of recording this video, Tesla stock up 0.2%, but much better than, again, when you look at the heat map and you're seeing Broadcom down 10%, NVIDIA, Microsoft, Amazon, Google, Meta, all in the red today. Oracle, obviously, AMD, Micron, all of these other AI stocks in the red, in deep red territory for some of them, and Tesla's in the green. That's a good outperformance. Now, in the news today, Waymo recalls 3,000 robotaxis after failing to stop for school buses. At the beginning of October, the National Highway Traffic Safety Administration launched a probe into Waymo's driverless taxis, alleging that they committed safety violations by failing to stop when a school bus ahead of them had, according to the initial report with the Office of Defects Investigation. The robotaxis would do this particularly when the bus is boarding or off-boarding students, although students get on and off school buses on the sidewalk opposite to the side of the bus that the robotaxis would pass on. This presents an obvious safety risk, or else it wouldn't be illegal to pass stop school buses in the first place. At the time, a Waymo spokesperson defended the September 22nd incident that led to the investigation by telling car and drivers that the bus was partially blocking a driveway that the robotaxi was exiting, and that the lights and the stop sign were not visible from the sensor's point of view. But now the investigation has finally turned into a full recall. It says over 3,000 vehicles recalled. Okay. So I actually don't think this is good news for Tesla. I don't really think it's news at all for Tesla. It's just kind of a non-event, but people might be taking that as, hey, look, Tesla's, going to dominate Waymo in robotaxi. We already know that's the case. It's just a matter of time. But some of those headlines, competition getting a setback, could be to Tesla's positive from a market perspective. Now, if we take a look at option activity today in Tesla stock, you have 134 different trades totaling $71.42 million with a positive order value of 87%. So again, despite the weakness out there in markets, seeing some very positive activity in Tesla stock specifically. Short interest continues to be elevated at about 3.3% and about 192,500 shares that are being covered on here today. Now, the Model Y ranks the #1 electric vehicle in Malaysia for November 2025. Rivian has announced its autonomy subscription, Autonomy Plus, launching in early 2026 and priced at $2,500 for a one-time purchase or $50 a month. Rivian's Gen 3 autonomy platform will include 11 cameras, 5 radars, and a front-facing LiDAR. It will be powered by Rapt 1, Rivian's in-house silicon. Now, 2 Model S vehicles were spotted in California with the same validation rig that Tesla has been using on their Model Ys all over the US. So this continues to be a story here where Tesla continues to map different areas around the country. Tesla has just opened North America's northernmost supercharger in Fairbanks, Alaska, with 8 charging stalls and 325 kilowatt hours of max charging speed. Now, in the news today, Tesla could be laying early groundwork for Starlink-enabled vehicles. A new patent application describes an RF transparent roof assembly capable of embedding satellite and cellular communication hardware directly into the vehicle's structure, which, yeah, that would be a game changer for Tesla owners. I mean, imagine that. Tesla starts selling Teslas with like 5 years of free internet. That could be a big seller. Sentiment today on StockTwits for Teslas coming in neutral at 52. Yesterday it was bullish at 56. Message volume is normal at 48. Yesterday was normal at 49. Participation ratio today coming in low at 34. Again, from a technical perspective, Tesla stock wants to really break out at any moment. I think, into the end of this year, into early 2026, there's basically all the reasons in the world Tesla should break out from here, whether it's Elon Musk's compensation package, the incredible setup it looks like economically we have for next year, the impressive growth that we should have in Tesla's AI divisions, Robotaxi and Optimus. In my opinion, it's really just a matter of time before this thing explodes to the upside. Between now and then, though, you want to watch the 50-day moving average. It recently was support back on December 9th and December 8th, as well as once you broke above on December 3rd. You haven't came down below this again, and it seems like there's a lot of buying activity in the 430s. If we do go through some more downside for AI stocks, if the sentiment continues to flip-flop, you would want to see if we hold support there. If we don't, then the 20-day moving average at $427 will be a critical level. And then below that, the 100-day moving average at $398 per share. I see upside in the near future for Tesla. I could be wrong. I'm not a financial advisor. I'm not a financial planner, so come to your own conclusions. But, it's unless we get some surprisingly bad news for Tesla specifically, I just don't see another, crash or correction coming about for this market broadly or for Tesla stock specifically. Now the RSI for Tesla sitting at 55.5, so broadly neutral, and the MACD line still well above the signal line, signaling some positive momentum. So that's even then, when the MACD goes positive, you tend to see like a 30 to 100% rally, and we haven't seen any of that yet. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come trade and invest with us, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.